Hi, I'm Eric.
And I'm Dick. We're the Annuity guys.
Are we looking at the most fun topic today we could possibly discuss? 10 annuity surrender charge questions that you need answered.
Well, Eric, this seems to be, if you listen to the media, you listen to the financial editorials, this seems to be the thing that everyone should be most fearful of with annuities are those evil surrender charges.
Surrender charge is bad. Annuity is good, charge is bad. It's everything. Yeah. Everybody focus on that.
Annuities would be wonderful if they didn't have these stupid surrender charges.
That's right. So we've got 10 questions here that everybody should be aware of when they're talking about annuities and surrender charges. Like, all right, well, first of all, what's a surrender charge schedule?
Well, a surrender charge schedule is what comes with every annuity, and you get to see it right up front.
It's not like an add-on? It's not a bonus feature that you get that you can choose to have one or not to have one?
When you fill out your application, folks, there's a schedule of the surrender charge.
So, year 1, 10%. Year 2, 9%. Year 3, 7%. Whatever those numbers may be,
yes.
They state them in black and white, unless it's a color printer, on what those exact amounts are going to be. So you have that awareness before you even send your money in.
And if for any reason the advisor, the licensed agent doesn't discuss that with you at that time or should have discussed it with you before that time, but shows you that schedule, if they've avoided that conversation with you, you should just
maybe
exit the room because you now know what you needed to know about this person.
Exactly.
So
the other thing is people always want, why do we have surrender charges at all? Why do they exist? And I think one of the things people have to understand about insurance companies is that they have to reserve for the liabilities that they have. So when they take on a new contract, they owe you money. An annuity is designed to pay you back interest or credits. So they have to then reserve for those. So to have a surrender charge is actually, and I think I'm jumping ahead, that it's not necessarily a bad thing because it allows the insurance company to buy investment vehicles that are more long-term, knowing that you're, not when I say on the hook for a longer period, because annuities are long-term vehicles, so they can buy a longer-term bond or a longer-term commercial investment to help cover that liability.
Well, exactly, Eric. It's really there, the surrender charge, as much as it's portrayed as something bad. It's there to protect you.
Yes.
You do not want the other policyholders that this company is relying on to guarantee your benefits to look at this short term and bail out of it.
Right, because let's be honest, if we're rate sensitive, if all of a sudden rates start to go up, everybody would dive out of these annuities that had maybe a lower rate.
Right.
And then what would happen? The insurance company would be then scrambling because they've got bonds in position for 10, 20 years.
Right.
All of a sudden, what do they do with those bonds? Yep. And that's one of the reasons surrender charges are there.
Exactly.
So they're not always bad.
Yeah, exactly. So I think we've answered, that question about are they good or bad. Yeah. But how long typically do surrender charges go on for?
Well, they're as short as 1 year, and I've seen as long as 20 years.
Yes.
Now, most common 7 to 10, 12.
10 to 12 maybe, and I think 10 would really be the most common.
The most common that for the vehicles we typically use for our retirement planning, 10 is pretty common.
And I think that, folks, one thing that, you would want to be aware of is that the longer the surrender, a lot of times, the greater the benefit.
Yes.
So you try to find that sweet spot in there where you get most of the benefits with the lowest surrender. So
yes, because you're looking at when the insurance company knows that you're committed for a longer period of time,
and sincere.
They can offer more or a richer benefit to you typically.
Right. Eric, what about the bonus that folks get with annuities? Not all annuities come with bonuses, but they come with, a lot of them will come with a bonus. And then the earnings that folks get, what's subject to surrender?
Right. Everything that is in your cash account is subject to surrender.
Yes.
So if you received a bonus, if you've had interest credited, if you're going to surrender, it's all on the table. So, and a lot, let's be honest, insurance companies, if they're giving you a bonus and you decide to walk away, they want their bonus money back.
Absolutely.
So a lot of times with a bonus annuity, you'll see a higher surrender schedule.
Correct.
So that they can recapture that bonus
Or you'll also see maybe a separate schedule.
Yeah.
That is what's called a bonus recapture schedule, which is still just a surrender.
Right. It's just a different way of stating it. So
yes,
exactly. So is there ways that we can get around surrender charges?
There's several ways. Well, one of the most obvious is a 10% withdrawal feature that the vast majority of annuities have built into the contract.
Yeah. Almost every annuity has some kind of penalty-free withdrawal provision. And 10% is probably the most common. There's a couple that are 5%.
Right.
And there are a few that do not have that, but it's the very small minority. The vast majority are the 10% free withdrawals.
Here's a little bit more of an unknown thing about annuities. Some annuities are what we call an MVA annuity, or a market value adjustment annuity. And that's not a surrender charge. It's actually an offset to a surrender. So it can actually increase your surrender charge, or it can decrease your surrender charge. So if you choose the opportune time with that market value adjustment, it can actually completely wipe out a surrender charge. So you could actually surrender your annuity early, and I've had this experience with some of my clients where they were able to actually get out of their old annuity, which wasn't performing well, use that MVA to allow them to move to a much better annuity and actually make money.
Yeah, and it's one of the most misunderstood aspects of annuities and the surrender charge process.
It really is
that market value adjustment.
Yes.
So, and I do want to point out one other way that you can avoid paying a surrender charge.
Okay.
And that's getting to the maturity aspect of your annuity. So if it matures,
so you mean these don't go on forever?
So you don't have to pay that surrender charge.
So there's some point where you actually have an annuity, but your surrender charge is gone.
Yeah, and then this is a common misconception for. Do clients want to know? Well, all right. So my surrender charge is up. My 7 or 10 years.
Yeah, it's over. Right.
Now what happens to my annuity?
Yeah.
They don't realize that it doesn't.
You got to throw it away and go and get a new one.
The annuity does not stop when the surrender charge ends. It continues on. It's strange, but yes, some people think that when that 10 years is up, the annuity stops. It's a lifetime product.
Right. Well, you buy it You buy it as a long-term retirement answer. It's a solution for your retirement. So at the end of the surrender charge, you just have the opportunity to go in and get your money out at any time you want with no penalty, but that company is still on the hook.
Right. They're contractually obligated to you.
Yes.
And there's something there that will actually provide you with lifetime income, strangely enough.
Yeah.
So,
hey, we already touched on this a little bit, but how about the heirs? You pass prematurely, you've still got surrender charges. What happens to the heirs?
Well, as I say, this is one of the, I would say, big benefits a lot of times on annuities is that 99.9% of annuities, when you pass, that surrender fee typically goes away, and all the cash is able to pass to the heirs penalty-free.
Everything that's in that account goes to the heirs penalty-free. And I've had so many folks just that were so relieved to actually know. They had the misconception because of all the bad press out there about surrenders that they had to have that annuity for this length of time or their heirs were going to lose all this money. And it's not true.
So, in fact, I think you've even shared a story where you had somebody look at coming in buying a bonus annuity, so you know you're getting a big upfront perk.
Yes.
And if they were not long of this world, what they've done is really buy an enhanced death benefit in some ways. Now, we're not suggesting you do that because the insurance companies will basically get onto it very quickly and that benefit would go away, but it is a strategy.
Eric, how can folks never pay surrender charges? I mean, how can they just flat out never pay surrender charges?
Well, the first thing is you plan properly.
Exactly.
It's all part of how you structured your retirement plan.
Yeah.
When you purchase an annuity, you know it's part of a long-term process.
Yes.
And so if you've planned for when you're going to take withdrawals, you've planned for how things are going to come available.
Right.
You never pay a surrender charge because you've outlined what's going to come out, when it's going to come out, how much you're going to pay, or how much you're going to receive, so that you never pay a surrender charge.
Exactly. You know the saying, Eric, proper planning prevents pitifully poor performance. What were you going to say?
That's exactly what I was thinking.
So, Okay.
Should we be focused on surrender charges when we're buying annuities?
Eric, I don't think it should be the focus.
You don't come in and say, let's only pick the ones with the shortest surrender charges. I don't care about my income benefits. I don't care about, lifetime income.
Solve your retirement objectives first and look at the surrender charge as one of those factors.
Yeah, as you say, unless you find a surrender charge, and I really haven't found one that is overly punitive.
Yes.
Then you would wipe it off the table, but I would say, you know what? Surrender charges are part of the equation, but they're there to protect you, and they're not the main factor when you're deciding to buy an annuity.
I agree.